All right, I see the chat is filling up. So please continue to share, introduce yourself and share where you're from. And we're going to go ahead and get started. And so welcome and good afternoon, everyone. Thank you for joining us for this webinar to learn about opportunities for Louisiana small businesses like childcare centers, early learning centers. And this is so you can learn how to access federal funding under the LED State Small Business Credit Initiative suite of programs. And so my name is Candace Weber, and I work at the Louisiana Policy Institute for Children. For those who are not as familiar with our organization, we are a nonpartisan nonprofit. We serve as an independent source of data, research, and information for policymakers, businesses, educators, families, and communities so that they can understand and act on the issues related to early care and education for young children age birth to 4 in our state. And so we are a co-host for today's training along with For Providers by Providers. These are two statewide organizations, and we're both committed and diligently working for the betterment of Louisiana and its children. And we also know that one of the pillars of success for Providers by Providers is education. And right from their website, it reads, "We educate our ECE providers and leaders on key issues impacting our industry and provide unique direct support for ECE directors and leaders to improve and expand their business development, administrative and staffing procedures, and overall workforce support." So again, we're bringing this information to you today to learn more about SSBCI and what programs are available to you as you grow or expand your childcare business. And so this time I am delighted, and it is my honor to introduce Rochelle Wilcox. She's the co-founder of For Providers by Providers and also the owner of Wilcox Academy for Early Learning. And she's also the inaugural Early Childhood Leader of the Year for the state of Louisiana. So Rochelle will share a few words before turning it over to our friends at LED. And so without further ado, Rochelle, I'll turn it over to you.
Thank you, Candace, and good morning, everyone. Thank you guys for joining today's webinar. We know how important it is for providers just to keep our doors open for the children and families that we serve across our great state of Louisiana, and for our staff to be here, so we know how important we are for the economy. I always say there is no economy without early care and education. And we also know that the fact is that we often have to make big purchases, or we have to make big improvements. Just today, I was telling these ladies that we had a pipe burst in our building and we have to do some renovations. So that's going to be some capital that we're going to probably need. In addition to if we wanted to expand or other things that we may need capital for. And with that being said, there are business acumen, or we often not sure about what it takes to be loan worthy, or who we may need to do who we may need to know in order to get that loan worthiness from. So we are excited that we have the Louisiana Economic Development Department with us today. Louisiana Economic Development, or LED, is responsible for strengthening the state's business environment and creating a more vibrant Louisiana economy. Their vision is a Louisiana that consistently outperforms the South and the U.S. in creating jobs and economic opportunity for its citizens. With the information you'll learn today, we hope if you have questions during this presentation, we will hold space for questions at the end of this webinar, but please feel free to utilize the chat throughout the presentations as your questions come up. This is an opportunity to ask any questions, as this is an opportunity for you to learn more about about LED and all that they offer. So at this time, I'd like to turn it over to Kelly Rainey, the Business Development Manager at the Louisiana Economic Development. Kelly and her team.
Thank you, Rochelle. I really appreciate that introduction. And again, sorry to hear about how the morning started, but I was thinking the same thing. It sounds like something that needs to be fixed, and you're going to have to pay to get that fixed. Thank you all for your time today. Thank you for making time out of your busy day, your business owners. So if you're here listening and speaking with us, that means you're not tending to your business. So I appreciate that time. I hope you find this information value added. We will drop some information in the chat about the website. I will reference and share my screen with you shortly and navigate through all of the information we're sharing with you today. Everything about the programs we're going to communicate can be found on the website that we'll put in the chat for you. At LED, I cover some statutory and discretionary tax incentive programs, but it has been most rewarding to work on these SSBCI programs. There are 5 new programs being added to benefit small businesses across Louisiana. It has been an interesting experience working with the federal government, as this is a federally funded program. But I do think that over the long run, the small business ecosystem of Louisiana will truly benefit from these federal dollars being able to either expand their business or maybe start a new business venture. And so I'd like to pause before we continue with our presentation today and recognizing what each of you do. Being a mother of 3 children, I have a new to 5-year-old, just turned 5 last week. I have a 7-year-old and I have an 11-year-old. And I can tell you, especially being a working mom, it is a tough job, and you are raising other people's children. You are helping other mothers and fathers. And I just want to say thank you, because that is a very hard job. It's one thing to take care of, train, educate, and look after and care for your own children, but you're doing this for other people's children. And to me, I am of the opinion that takes a very special person. It takes a very special level of patience as well. And I just want to say thank you to all of you out there. I truly appreciate the service that you're providing for those children. So having said that, I'm going to share my screen with you in just a moment, where we will get into some of the program specific details. I'll share with you today some programs that may benefit your business in providing financing through a loan program. And then at the end, should time permit, I'll touch upon a couple of new programs also under SSBCI that may provide financing from an equity financing perspective, by, instead of a loan, which you would repay, it's essentially sharing in a small percentage ownership stake of your business to receive investment capital that you need to grow or expand your business. So there are 5 total programs that we'll mention to you today. For those that are not familiar with SSBCI, that stands for the State Small Business Credit Initiative. And this is actually the 2nd time that our country has been authorized to use federal funding under the State Small Business Credit Initiative, or SSBCI. The first time being after the 2008-2009 financial crisis. This time, this federal program is to help in the recovery from COVID. So having said that, I'm going to go ahead and share my screen. And as I pull this up, I'd like to point out the first thing when the screen populates here. All right. On our call today, I do have a couple of our LED team members, but here on our website, you can take a look at our 4 primary team members here, myself, Susan Bigner, who covers both of our equity programs for LED, Shamel DePete, who covers our micro lending program under SSBCI for LED, and Marissa Dwan, who covers our Collateral Support program and Loan Guarantee program for LED under SSBCI. Marissa is here with me today and will share some program details with us as well momentarily. In a moment, I'll drop in the chat the website I'm referencing. It is LouisianaSSBCI.com. Again, that's LouisianaSSBCI.com. Here on the website, not only will you be able to find program information for all 5 programs, but you'll also be able to access a listing of providers who are offering these programs. You'll be able to see what the application process looks like, what the eligibility components are to qualify under each of the programs, as well as a listing of FAQs, or question and answers, if you will. We have those listed here at the top. So you can easily see whether you're interested in following up on specific program detail. Just select which program is of interest, or you might be interested in looking at the applicant FAQs, which can be found here, program specific or general FAQs also. And then last, I'll come here to our listing of resources and share with you a very exciting tool that LED has just rolled out for small businesses of Louisiana as well. And with that, we'll go ahead and get started with our first program today. We will review the micro lending program. Now, with our micro lending program, it's really intended for the business owner who has smaller financing needs that might range anywhere between $1,000 and $100,000. Now, the micro lending program is offered through predetermined, pre-approved micro lenders. These micro lenders have undergone an RFQ, or request for qualification process. They have undergone enhanced due diligence, and they have been approved by our board for participation. And at the very bottom of this page here, you'll be able to see a listing of each of the providers offering the micro lending program. There is a total of 7 program providers, of which 5 are currently on our website. The last 2 are working through the final onboarding process to have their point of contact information populated here on the website. So here you can see the listing of the micro lenders across the state that are offering the micro loan program, and the respective contact person and their information. Also, many have included their websites. All right. Now, as previously stated, the micro lending program is intended for the smaller financing needs of the business owner. And those financing needs might range anywhere from $1,000 to $100,000. It's intended for the business owner who has 100 employees or less, and is intended to provide a faster access to capital by an expedited approval process. Because of the enhanced due diligence that each of these micro lenders underwent, LED has structured the micro lending program to really lean on these lenders' loan policies to determine the overall structure of the loan. So while there are some eligible business purposes and uses of the loan proceeds, or eligible use of funds, there's also some ineligible activities that we'll go over for this particular program, the micro lending program. So here for eligibility, you'll see I mentioned that businesses with less than 100 employees may consider the micro lending program. The business, for all of our programs, the business must be registered with the state of Louisiana to do business, of course. And for all of our programs, this will sound a little redundant after we probably get to the third program, because Treasury has actually defined for the SSBCI program what an eligible business purpose may include. And it's things you're probably very familiar with: startup costs for a new business. Maybe you need equipment or inventory. Maybe you need to renovate or build a new facility. Maybe it's just for general working capital needs, for example. Those are all examples of eligible business purposes in which a business owner may apply for funding for the micro lending program, as well as our other loan programs. Now, there are a couple of hard lines in the sand in terms of ineligible business purposes, but with the audience that we have on the Zoom today, I don't know that we would run into any of these instances, but for full disclosure and transparency, I'm going to share them with you. They're listed right here as ineligible business purposes, in case you may have a second company, or your spouse may have a company, or you might find yourself in a conversation and you might be knowledgeable about what is allowed and what's not allowed under SSBCI for this program. Again, the ineligible businesses and activities, this listing here that I'll review will be consistent across all of our loan programs for SSBCI. So a restaurant, food truck, grill, or cafe, as long as it's been in business at least 2 years, is eligible for the micro lending program as well as the other loan programs. However, if that restaurant, grill, food truck has not been in operation for at least 2 years, that would be an ineligible business type. You can see here some other ineligible business activities, but again, with the audience we have on the Zoom today, I don't think that would be an issue for the primary business purpose that you're representing for the Zoom. Speculative real estate purchases, owner-to-owner buyouts, refinancing, recreational parks, amusement parks, theme parks. These are examples of ineligible business activities. And of course, anything deemed illegal would be an ineligible business activity as well. Now, I mentioned earlier that the micro lenders underwent an enhanced level of due diligence and received approval by our LED board for participation. And because of that, the LED micro lenders are able to underwrite and structure the loan based on their internal credit policies. You may recognize or may not, but many of the micro lending providers are CDFIs or community development financial institutions. And CDFIs are typically mission aligned with ensuring access to capital for businesses within their geography that may have traditionally been overlooked or underbanked. And while the discretion in terms of the underwriting for the loan request under the micro program and the structure of the actual loan is determined by the lender, there are a couple of items that LED has put forth for the micro lending program. There is an equity requirement for the micro lending program, and the exact amount of equity required is to be determined by the lender. To give you an example of what might count towards equity for the lender for the loan request, we would consider paid in capital, cash, retained earnings, for example. The micro lending program, while the loan ranges from $1,000 to $100,000, for the loan sizes less than $50,000, the lender may elect to structure the micro loan on an unsecured basis. So for the micro lending program, there is the possibility that the lender may offer an unsecured loan for those smaller loans less than $50,000. On the loans $50,000 to $100,000, collateral is required. The lender will determine exactly how much collateral is required and what is an eligible collateral asset. Being in economic development, LED does have a couple of lines that they have drawn in terms of ineligible collateral assets to pledge for the loan. And this is consistent across all of our programs. The biggest one is that we do not allow a business owner to pledge their home, their primary residence where they sleep at night as collateral. While it may be very commonplace for a business owner to leverage the equity in their home, their primary residence, to provide the source of collateral for a business loan, that is something that LED would prefer that we do not offer in our programs. Again, being in economic development, that was just one area we did make mention for the micro lending providers. But other collateral requirements would be determined by the micro lender. And again, on those loan dollars less than $50,000, the lender may determine the loan is eligible on an unsecured basis, meaning collateral may not be required. To apply for the micro lending program, I referenced earlier, designated micro lenders that can offer this program. They have the micro lending application forms with them. A business owner interested in pursuing the micro lending program would simply contact one of those micro lenders, discuss their business financing needs with that micro lender, what the project entails. The lender will collect their application information. The lender may also request from the business owner that they provide projections, if it's a new business, for example, and maybe a business plan. If it's an existing business, the lender may request supporting documentation to the application, such as tax returns or financial statements. However, again, depending upon the lender and the loan request, the exact amount of supporting documentation required by the lender may vary. Once the lender has gained all of the applicant's information for their loan request, the lender will review that information, underwrite the information, and recommend a loan structure for their request. That micro lender will then share their underwriting criteria package with us at LED for our internal review. We, LED, will communicate with that micro lender within a specified time frame as to the approval decision for that request. And because of the way this particular program is structured with the micro lenders, they are in receipt of the funds to serve as loan proceeds at the closing. So they can move very quickly to schedule the closing and fund the loan for the micro program. And just to reiterate, again, at the very bottom of this micro lending homepage is a listing of all of those providers and their contact information. Now, I do know that there are 2 more micro lenders who are working to complete their onboarding process, and they will be populated on our website shortly. Now, while this particular program here, the micro lending program, while it does identify specific lenders who are able to offer this micro loan program, the next 2 loan programs that we will share details about, the Collateral Support Program and the Loan Guarantee Program, they actually allow LED more flexibility in which lenders we can work with. Both the Collateral Support Program and the Loan Guarantee Program that we will get to in just a moment, I'll turn it over to Marissa to share those details, but both of those programs allow LED to work with your bank of choice. So if your bank is currently not listed on our website or is not familiar with these programs, we would welcome the opportunity to speak with them, to educate them about these programs and answer any questions they may have. And in addition to that, LED does have a listing of LED preferred lenders. It's a new designation that has just rolled out roughly a month ago. We have 5 LED preferred lenders that we are working with who will offer the collateral support and the guarantee program. Their information will also be populated on our website along with their direct contact as well for you to pursue. So I'm going to turn it over to Marissa Dwan. Well, we will go through the collateral support program and then the loan guarantee program. And again, some of the items you might hear under the collateral support program and the loan guarantee program may sound a little familiar from what I just reviewed with the micro lending program in terms of eligible business use of funds, for example. Marissa, I'm going to turn it over to you now to share some details about the collateral support program. We are very excited about this program. I should share with you from all of the research that we have done leading up to this point of launch for these new SSBCI programs. We have not uncovered another state or federal program in Louisiana that essentially offers a cash deposit to supplement a shortfall in collateral that may exist. And so having said that, I won't share anymore. I'm going to turn it over to Marissa to provide the rest of the program details for the collateral support program.
Thank you, Kelly. Good afternoon, everyone. The Collateral Support Program, this program was created to assist small business borrowers who are facing difficulties getting approved for a loan due to a shortfall in collateral. When applying for a loan, it's important to know that each bank has their own internal credit policies, which typically include an equity injection or putting up collateral to back the loan. We realize that with smaller companies and startups in particular, there may be a struggle to meet that criteria. So that's where this program comes in. This program provides cash to the lender to pledge to the loan to help the borrower meet those collateral requirements in the event of a shortfall. The lender is able to request up to 50% of the loan amount for collateral support, with a maximum cash amount of $250,000 and a maximum loan amount of $1 million. So a quick example of how this would work. Let's say that you are in need of a $100,000 line of credit to help with working capital needs, such as payroll, inventory. And you have some inventory or small equipment that you can put up as collateral, but it's not enough to meet the bank's requirements. Typically, the bank will want to be fully collateralized, meaning the value of collateral would be equal to the loan amount. So in this case, there's a shortfall, and LED would deposit $50,000, which is 50% of the loan amount, into an account with the lender to pledge to the loan as collateral, making the collateral requirement whole. To qualify for the program, the company must have less than 100 employees. They also must exhibit a shortfall in collateral. The intent of the program is to enhance the collateral coverage, but not to be the sole source of collateral. The company must also create or retain one job, and that would be a full-time job and can also include the business owner. There's also a minimum equity injection of 10%. This equity can be either cash at closing or on the balance sheet under equity. And the funds must also be used for an eligible business purpose. Kelly went over that with the micro lending program, and it's exactly the same. The ineligible business types and purposes for the collateral support program, again, these are identical to the micro lending program that Kelly mentioned. Restaurants, grills, food trucks less than 2 years, those are not eligible. Neither are bars. And this is also going to include any business where the majority of sales is from dispensing, distributing, or packaging alcohol. No gaming or gambling. No owner-to-owner buyouts. It must be an arm's length deal. And also no types of financial services, speculative real estate, or refinancing. It must be new funds. As far as the process, the lender will be your first point of contact. A little different from the micro lending program, participating lenders are not pre-approved, and any insured Louisiana depository financial institution, credit union, or CDFI is eligible to participate in this program. The collateral support application is available on the website. Your lender of choice would submit the full application along with their credit analysis on your behalf. All of these loans are reviewed internally, and our turnaround time is approximately 5 days. And that sums up the collateral support program. If you have any questions on this, please drop it in the chat and we'll get to those at the end of the program. And the next program up is going to be the loan guarantee program. Our small business loan guarantee program, this one is a current and active program, and this helps businesses by providing up to an 80% guarantee to lenders. This guarantee works kind of like an insurance or a cosigner. If something were to happen and the loan were to go bad, LED would pay up to 80% of the loan. Mitigating 80% of the risk for the lender gives the lender more comfort in approving loans that may not meet all of their standard credit criteria. For example, if the credit score is quite not there, maybe the debt to income is a little bit higher, maybe it's a startup. Some banks won't entertain a startup without some form of a government guarantee. The maximum guarantee that we can provide to the lender is $1.5 million. The loan amount can be higher, but our participation will max out at $1.5 million. We look for 3 major credit criteria to qualify. Equity must be no less than 15% of the loan amount. Again, with same as collateral support, this can be cash at closing or on the balance sheet under equity. The collateral value must match the guaranteed portion of the loan. For this example, if we are doing another $100,000 loan and an 80% guarantee, the collateral value would need to equal $80,000 to qualify. Different types of collateral we can accept. We can take furniture, fixtures and equipment, land, building, receivables and inventory. And as Kelly mentioned earlier, we cannot accept a primary residence as collateral. The eligibility and ineligibility, those are also exactly the same as the micro lending program and the collateral support program. So I'll move over to the process. The process is very similar to collateral support. Any insured Louisiana financial institution, credit union, or CDFI is eligible to participate. We also have our preferred lenders on the website as well that you can contact. So the lender is going to be your first point of contact here as well, and they will submit the full application on your behalf. Turnaround times for the loan guarantee program are a little higher than collateral support, and this is based on the size of the loan. Guarantee amounts under $500,000 are approved internally, and that's approximately a 2-week turnaround time. Anything over that amount is approved by our LEDC board of directors, and they meet once a month. So depending on when we get the application, the turnaround time can be approximately a month or whenever the next board meeting is. And that sums up the loan guarantee program.
Thank you, Marissa. So just to point out a small detail so that I know it's not overlooked, for this loan guarantee program and also for the collateral support program, the program Marissa reviewed prior to this loan guarantee program, you'll see right here under the application process, bullet point line item number 1, you can find the application. Here under the guarantee program, obviously, is where we have the loan guarantee application form. But if you were to go under the collateral support page in the exact same location under the application process, you'll find bullet point line item number 1, the collateral support application as well. It's right there for you to access. Also on this guarantee homepage, as well as the collateral support homepage, a little further up, just wanted to point out, you might be able to view a program specific digital brochure right here under each program, or visit program specific question and answers. So under each program homepage, there is a digital brochure, there is the program specific, frequently asked questions, and the application forms. So we've just reviewed 3 loan programs that have launched under SSBCI for Louisiana small businesses. That represents 3 of the 5 new SSBCI programs intended to ease access to capital for the Louisiana small business community. Next, we'll segue over to our 2 equity programs. I mentioned earlier when I was reviewing our SSBCI team at LED that Susan Bigner handles our equity programs for LED. She covers our seed capital equity program and our venture capital equity program. She's here with us today, and I'm going to turn it over to her in just a moment to share some details about the seed capital program and the venture capital program. While they're very similar in nature in terms of the way they function to provide funding or financing for your business, they're intended to cater to businesses at essentially different stages in the business life cycle. Now, for both of these programs that Susan will review in just a moment, you'll be able to find a list of all of these equity providers right here at the bottom of the home screen. I'm scrolling through the seed capital providers now. Each has their name listed, their point of contact, and website listed as well. You'll soon hear from Susan why it would be important to visit the website for any equity fund if you are considering equity financing as a means to get capital for your business. We have a total of 29 equity providers between the seed capital and the venture capital program. When we get to the next program, the venture capital program, I'll review those provider listings as well. But I'm scrolling back to the top of the seed capital program homepage on our website, and I'm going to turn it over to Susan Bigner now to share a little more detail about these two programs with you this afternoon.
Good
Susan?
afternoon. Yes. Hi, Kelly. Thank you. Good afternoon. Can y'all hear me?
Yes, ma'am.
Okay, good. So seed capital and venture capital is different from the loan programs. This is where a investment group may take an interest in your company, and for a percentage of your company, they will invest. So what they would do is they would come in and do a round of funding and invest money for working capital or technology or other needs for the business. Seed capital is for early stage and startup. A lot of these are new technologies, new businesses that are not able to get financing. They're just beginning. The venture capital is for companies that are expanding. And again, they are coming in to invest in the business by taking a percentage of the business. The same ineligible business purposes are applied to both of these programs, similar to the loan programs. The difference also is that we do not have an application on our board, on our web pages. You would contact one of the participating equity funds and get with them. Each one is a little bit different, and they have their contact number and email address on our website so that you can reach out to them and they will ask you certain questions about the business and what they can do to assist your business. Some of them may be able to do technical assistance for the business. Childcare mostly is going to be a loan type of situation and not a venture capital. Venture capital usually is looking for something that is probably going to be high tech or a special service that is not offered widespread. So it may not be something that this group is interested in receiving, but it is something that we want you to be aware of in case you hear of someone who is looking for funding. So,
Susan is right. Equity financing is a very specialized financing vehicle. However, with technology today and all of the capabilities of technology starting out with our children at a much younger age, in the event that there is some innovative technological creations through the particular daycare industry, this very well could be a source of financing. And I'll just give you an example I'm making up because I know there are some schools that have access to smart boards in their classrooms. And so that is such a creative and innovative way to gain the attention of the youngsters who are so interested in the phones, the computers, the iPads, the tabs, the technology. It engages them from an entertainment perspective, but it's an educational approach. So I just wanted to provide that example because I know a lot of schools may have incorporated something such as a smart board, and with AI and artificial intelligence on the horizon more and more in our conversations in almost every industry, there could be something that is created where an equity investor may be interested. But again, those are 2 programs of the 5 total programs that have just launched for Louisiana small businesses, 3 loan programs and 2 of the equity programs. And again, all of the program details that we've just verbalized can be found here under the program listing once you select which program you're most interested in exploring. However, often businesses, when they go to seek financing, they're asked a number of questions from the lenders. They're asked to provide not just the application, they may be asked to provide equity, collateral, a personal guarantee, and then they're asked for financial statements or projections. They may be asked for bank statements as well. And if you are a new business, just starting out, or maybe you're just a young business, very early in the business life cycle, only having been opened for a few years, and you're still considered to be a startup and are growing, you may find that you need some additional resources in order to help fine-tune your business model and or expand if you're a little further down the business life cycle. I'm mentioning this because LED has launched a new centralized database, which in my opinion has been long overdue, but it is going to be a great value add to the small business community for our state. Here under the resources tab of this website, LouisianaSSBCI.com, which by the way, I've dropped that website link in the chat, LouisianaSSBCI.com. If you click on the resources tab at the very top of that website, you'll see a list of stakeholders, partners, and allies, and organizations that LED works very closely with. The new initiative that I just mentioned that LED has rolled out, it's a pilot program called Louisiana Business Hub, and it's here in this listing as number 2. And I'm going to go ahead and click on that and share a little detail with you because this very well could be beneficial for the audience also. Now, this is a new digital platform which connects entrepreneurs and small business owners with resources to help them start or grow their business. You can search for information, networking events, or resources for your small business. Whether you are looking for services to help you with business planning, entrepreneurial training, or business counseling to sales and marketing or human resources, you can find that information here. Essentially, you would come down here and select the region in which you are seeking assistance. So I'm just going to select Capital, for example, because that's where I'm located today, right here. As this pulls up, there are just a few questions a business owner would enter. They would enter what stage they are in their business. They would enter the type of assistance that they're looking for, whether it's business planning services, like I mentioned, financial resources, maybe marketing or legal services, or maybe it is you're looking for networking events to attend in order to learn more from peers in your industry. Whatever the reason you're exploring this Louisiana Business Hub database, you can scroll through this drop-down box to make that selection. And then if there's a specific need, the third entry you can select as well. And once you click search, there will be populated a full listing meeting the filters you've just entered under the Connect to Resources tab, which will provide you with those items available through organizations currently. And it will also provide you with a listing of events that are upcoming that fit the filters you have entered as well. So this has just launched and rolled out as a pilot program just 4 weeks ago. We are very excited about this centralized database. It is managed by LED, but powered by the organizations that have their services entered here. So going back to our SSBCI website, if you'd like to receive updates from LED, you can simply fill out the Stay Connected link, put your information and email here, and you will receive information from LED about new programs or updates to existing programs as well. That concludes the presentation of the programs for LED SSBCI. I'm going to stop sharing my screen now so we can see what questions we might be able to answer from the audience.
Yes, thank you, Kelly, there and LED team. So yes, there are a couple of questions that are in the chat. So if we want to start with those, we can, but also if folks want to come off mute to ask their question, and actually some of them may need to come off mute to kind of clarify, because I believe most of the questions came up during your presentation of the first set of programs.
Okay.
And so the first one I see says, hi, Kelly, just curious, what is the typical time frame from application to funding for the microloans?
Wonderful question. And so I will share with you, it really does depend upon, the application request. So for example, if collateral is involved, depending upon the type of collateral, it might take a little bit longer. For example, if real estate is involved, typically anything where real estate is involved does take a little bit longer. So I need to put that disclosure and disclaimer out there. However, in general, because these are smaller loan sizes ranging anywhere from 1,000 to 100,000, because of that fact alone, we anticipate these loans to move fairly quickly, and that can be anywhere from 5 business days to maybe no more than 2 weeks. And the reason why I'm saying 2 weeks is if there's that real estate transaction out there where there needs to be an appraisal, etc. Those are the things that are really out of our control. And when a real estate is involved and an appraisal is involved, I'm sure everybody's familiar with an appraiser performs that level of due diligence. So that would be a third party factoring that timeline as well. But for the micro program, that is anticipated to move quicker than our other loan programs because of the way that it is structured. I can share with you that since we've launched just 3 weeks ago now, not even 3 weeks ago now, I can share with you that we have received 3 micro loan applications from one of our micro lenders that was listed on there, and we were able to turn those feedback times back to the lender to communicate the approval to the borrower. We were able to do that within 3 days and then 5 days on the other. And so they were secured, by the way. It was not real estate, but they were secured. So I hope that answers your question.
Yes, thank you so much.
Okay.
All right, so the next one, scenario question. So it says, so a business who wants to participate in the collateral support program must identify a lender on their own? If so, do you have guidance for folks to find a lender that is right for them?
Wonderful question. So we have a couple of options. We have, first of all, some business owners have an existing banking relationship, and we can work with their existing bank if they would like us to. Even if that bank is not familiar with our programs, we can coordinate a discussion to educate them on the program and share all of the details, the application forms, the agreements for them to preview, and then of course answer any questions. I will tell you, oftentimes a business owner is going to their bank and saying, I want to use the state guarantee program, and they'll bring their application into that lender, and essentially the lender contacts us because their client has brought this program to their attention because they had a need. However, in addition to that, and outside of that, LED is offering an LED preferred lender designation, which does have some additional featured benefits by being an LED preferred lender. That is a new designation that has just rolled out. We have 3 of the LED preferred lenders populated on our website currently and are working to complete the final 2 onboarding contact information for the website as well. The application for LED preferred lenders is open and ongoing. So if there is a lender you're familiar with that would like to learn more and become an LED preferred lender, we are taking applications for those as well. We can also provide a listing of banks that have utilized our Guaranty program in the past, since the Guaranty program was grandfathered and applied with enhancements as the U.S. Treasury has allowed under the SSBCI guidance. So really 3 factors. Number 1, the microlending program, or 4 factors. The microlending program has a listing of those providers on the website. For the collateral support in the loan guarantee program, we can work with your bank of choice, whether it's your current banker or if you're looking to start a new banking relationship with a new bank. Or you might be able to engage one of the LED preferred lenders who is offering the collateral support in the guarantee program. I would like to also share with you that if currently the LED preferred lender offering the collateral support in the guarantee program, because we have just launched within 3 weeks and that is a new designation, we are going to and intend to populate the additional LED preferred lenders as we receive them on the website. So what you see today will look very different, say, from next month and the month after that, etc. The SSBCI program is a 7-year program. It's a very long program window. So we are working to generate a listing of LED preferred lenders. Good question.
Great question. Let's see this next one. So Ms. Sonia Brown Joseph, I may need you to help me provide some context because it says, can you use rental property?
Okay.
She mentioned that you couldn't use your home that you live in because you use, if you have rental property, that's not a primary residence, is what I meant.
Okay.
So I'm going to call in the Lifeline Marissa for this one, but in some, you're correct, the primary residence is ineligible to serve as collateral. However, if it's say a second home or investment property, that is allowed. Is that correct, Marissa?
Yes, that's correct. I need a second mortgage, a second property, investment property. Those are eligible to use as collateral.
Thank you.
Thank you. Next question. Can it be a bank or just credit unions to apply for lending?
Very good question. And so for fear of being confusing, I'm going to take a stab at this question. So for our microlending program, the lenders that can offer that particular program are those that are listed on that website right there. However, for our collateral support program, we, LED, can work with any insured depository bank, insured depository community bank, insured depository credit union, or insured depository CDFI, which stands for Community Development Financial Institution. And the reason I'm being very specific about saying insured depository bank, insured depository credit union, insured depository community bank, insured depository CDFI is because for the collateral support program, we are offering a cash deposit to serve as a supplement to fill that gap in the lender's collateral requirement for the borrower. So we're putting up cash in that financial institution. So we therefore want to make sure that the bank, credit union, CDFI, or community bank we're working with is a depository institution that can hold our cash for that loan deposit and therefore must be insured. Now with that third loan program, the loan guarantee program, we are offering a state guarantee to help mitigate any risk the lender may identify in the underwriting process. So therefore, with the loan guarantee program, we are able to work with any Louisiana bank, Louisiana credit union, Louisiana CDFI or Community Development Financial Institution, or Louisiana credit union. So it does not necessarily have to be a depository arm for the bank, credit union, CDFI, or community bank. I hope that was not too confusing, but there is a difference.
All right, thank you. We're going to keep rolling. Questions are coming in. So the next question, what real estate opportunities are eligible for lending?
Well, so I think that's a great question and brings me to a segue to some additional talking points I wanted to share with the group today. So with respect to real estate, if the business applicant wants to purchase a building to use as their office, that's allowed. If the business owner wants to build from the ground up their facility, their office, that's allowed. If the business owner needs to do some expansion improvements, that is allowed in terms of eligible business use of funds. What is not allowed is when a real estate transaction involves investment real estate, non-owner occupied real estate in some. So if it is not the primary operating business location, most likely it is not going to be eligible. And we really determine if it's a situation where it might be a business that is in, say, a multi-business complex, and the business owner owns everything, but their business is one of maybe 5 suites that occupies that complex. We're going to look at the occupancy rate overall instead of taking a loan request for the entire strip center or business complex. So we do look at ownership structure, whatever there's multiple units involved in the facility, but in short, to purchase a building for the business owner's office, to build a building for the business owner's office or facility, or to expand, make improvements to a business owner's office facility.
All right, great question. All right, so Aisha, I see you have a couple of questions, and so I'm just going to hit these, and if you need to jump in to clarify, please do. So the first question she had was, are there any tax incentives or other government programs available to small businesses in Louisiana that can help them save money and grow their businesses?
That's a great question. And my answer in general is it depends upon the business type, the use of the funds that you would be applying for those tax credits under. And the reason I make that statement is because there are a number of statutory tax credits programs where a business may receive a tax credit, thereby reduce the amount of tax they owe the IRS. So that would be the savings part from the question. Now, with, Marissa, while I'm talking, I'm going to ask you to drop this in the chat for me, but the website to our business incentives, we have some statutory and discretionary business incentives for small businesses, and then LED offers some tax incentives for large scale commerce and industry size type businesses. But for the smaller businesses, those that Marissa is putting in the chat right now, there are tax incentives under programs such as the Angel Investor Tax Credit Program. There are tax incentives under a program called the Research and Development Tax Incentive Program. There are other tax incentive programs if the business participates in some manner through import or export with our port facilities in the state. There are also tax incentive programs for large companies where headquarters are being moved through tax equalization and industry assistance. So that's really a very broad question because there are so many tax incentives for small businesses. If we're talking specifically for daycare facilities, childcare facilities, we would need to know more about the intended use and more about the actual investment to know if they would be eligible for one of those programs. But in terms of accessing a listing of the tax incentives for small businesses, where a business owner may see the eligibility requirements to determine if they should pursue the application, that would provide a tax credit on their tax returns and thereby reduce their tax burden they could possibly owe to the IRS. And that would be the way a business tax incentive credit would help with savings for a small business owner. Marissa, is there anything more you would add to what I've just shared? I know that was a very broad answer to that question.
I think you covered it all, Kelly, and I put the link for our whole incentives department in the chat as well, so they can view all those programs on our website.
Perfect, thank you.
All right, so this next, actually, I'll do these two questions together because it's for perspective, looking at Louisiana as a state and then also in comparison to other states. And so what unique challenges do small businesses in Louisiana face compared to those in other states? And then based on your experience, what specific industries and sectors are expected to experience growth in Louisiana in the next few years?
I think we are in a very unique situation in our state right now where there are some feathers in our caps, if you will, that put us above peer states. And then there are some items because of the overall economic landscape across the country that put us on a very even playing field in terms of a rising interest rate environment, in terms of the regulations that the financial institutions may be undergoing in the next couple of years because of the most recent bank failures, Silicon Valley and Signature Bank. When that leads to increased regulations, banks hire more compliance people, that's more expensive. Therefore, they're increasing their fees and they're raising their rates. That means a more expensive loan repayment for the business owner. So these three loan programs that we presented today are intended to help that lender mitigate any risk they identify in that loan application process. So with a higher repayment, that's going to put strain on a business cash flow. Therefore, their debt service coverage ratio that a lender looks at may be stressed. That very well could be a reason on its own why a lender may need to request one of our programs to help mitigate that risk. I can also share with you what puts us above some of our peer states and feather in our cap is being positioned with oil and gas and the dedication from our current governor with clean energy. There are many new initiatives working with other departments within LED for carbon capture to build clean energy plants, new business activities, exploring tax incentives for clean energy as well. So there will be much more that our state will hear on clean energy initiatives for small businesses and residents in the future.
Great. Question regarding our family child care providers on the call. So the question is, which loan would be recommended for a home child care provider looking to expand?
Well, for a home child care provider looking to expand, really any one of the three programs could be beneficial. And the reason I say that is because just because the child care provider may be working out of their home, that does not necessarily preclude them from any one loan program. So I would probably ask to learn a little more about their needs, because if the applicant, the owner of the child home care business, if that applicant is otherwise creditworthy but may not have all of the resources to provide the full collateral requirement the lender is asking and the equity requirement that the lender is asking, but otherwise creditworthy, the collateral support program may be something to consider for that particular business applicant and owner. However, if say the collateral were there, it's a larger loan request, cash flow might be a little strained, for that business home care provider, having a state guarantee could actually provide a larger sense of security to the lender, because the entire loan amount would have a state guarantee up to 80% of that loan amount. And so that actually could carry more weight in the underwriting process in the eyes of the lender than the collateral support program. So I would need to know if the business owner has resources to provide collateral, and if they're otherwise creditworthy in the eyes of the lender, that might determine whether a collateral support program is a solution or not. However, if we know that the child home care provider who's looking to expand wants to add on another room to their house to expand their operations, and maybe that is going to be dedicated, I'm just making this up, maybe that's going to be dedicated just to ages 0 to 6 months, for example, it would be specific to infants, then you very well may benefit from a microloan program. And depending upon the applicant, and if they are deemed creditworthy, the microlender may underwrite that loan as an unsecured request if the loan amount need is less than $50,000. So it really just depends upon the actual big picture for that particular applicant and what their real needs are, and what assets do they have available to work with, and what risk, if any, does the lender identify in their application.
Good question. So how do these loans structure? So for example, if you're using collateral support, are you paying any monthly note or just the percentage fee upfront?
So great questions. With all of these loans, the microlending program, the collateral support program, and the loan guarantee program, each of those does require a monthly principal and interest repayment. Now, I can tell you though, if the reason for the loan request is due to construction, those are most often structured with an interest-only type of repayment for a period of time, which is defined up front during that construction phase. And then the loan would convert to a standard principal and interest monthly repayment structure. And again, that last statement really involves construction requests, is when we see two types of repayments being applied. Otherwise, typically it is a monthly repayment of principal and interest across all three loan programs.
Makes sense. Another scenario, if there's funding for expansion or purchase available through a local bank, is LED funding allowed to be used toward in combination or as a down payment? And Ariel, if you need to jump on,
Yeah, I think I need to hear that question again.
So let's say our local bank is willing to finance an expansion or something going on. Is there any way that y'all work in combination? Like if we needed a portion of the loan covered from the bank and then a portion covered with y'all, or like funding for the down payment?
So, so a couple of things. We are not direct lenders. So we are conduits of the federal dollars through the identified program providers, or to your bank of choice if we're talking about collateral support or the guarantee program. So that's the first thing. However, if I would ask this question, if your bank is willing to do the loan request, then I would wonder, was there any risk they identified through their underwriting process of that loan request? Because if they're willing to do the loan request, there may not be a need for some type of state involvement, whether through a state guarantee or a cash collateral deposit, if you will, if the lender is willing to do the loan without any extra support from a state level. However, if it's a situation where the lender is willing to do the loan, if the business owner is able to provide X amount of equity for the loan, if the borrower is able to provide the lender with X amount of collateral to secure the loan, and the borrower is looking at their personal financial statement and realizing that they meet everything that the lender is asking of them, except they do not have every penny of the collateral the lender is requiring, that could be a situation where the collateral support program could be of benefit. So I've described a situation where the borrower may have enough for equity, but doesn't have enough for equity and the collateral requirements that the borrower is requiring. That the lender is requiring in order for the borrower to be approved for the loan. So that would be my response depending upon the exact situation. Marissa, I know collateral support. Would you add anything else to what I've just stated?
The only thing I would add, I know she asked something specifically about using the funds for a down payment. Using any of the 3 programs for down payment or for the equity injection would not be an eligible use of purpose.
Thank you.
Thank you, Marissa.
Yep, and I think the next question you had was just where can a local bank apply to become involved with the LED programs, right?
Wonderful question. Yes, they can go right there on our website at Louisiana SSBCI.com. And I showed the group here today the applicant FAQs at that top banner listing, but right next to it was provider FAQs. And the lender would just click on the provider FAQ, and it's actually the first one. But to make it easier, what I'm going to do right here is I'm going to put an email in this contact for the lender, LED SSBCI2 at le.gov, for the lender to send an email request to learn more about how they can use these programs for their clients. That lender, to make it easy, just email that inbox and we will make sure that we meet with them to discuss the programs, answer any questions, and see how we can get them onboarded to offer the programs to their client base.
Great. If we have some a child care center is a nonprofit, are they eligible to participate in any of these programs?
That is a great question. And the answer is yes, as long as the child care center has an eligible business purpose. Okay, so we reviewed examples of the eligible business purposes earlier, such as working capital needs, inventory, supplies, construction of the business, renovation of the business. So those were some of the examples that we reviewed, and were consistent across all of the loan programs. So as long as the child care center meets one of those business purposes, they would be eligible even if they are currently a nonprofit organization. So even if, say, it is a child care center nonprofit organization that's affiliated with, say, a church, a faith-based organization, that is okay as long as the borrowing entity, that child care nonprofit center, is applying for use for funds, and it is an eligible use of those funds, that they are eligible as an applicant. Yes.
Great. And I think the last question we have in the chat is about interest rates. And so the question is, what is the interest rate percentage, and is it fixed or variable?
Great question. So each lender under the 3 loan programs will determine what the overall interest rate is. However, there is an interest rate ceiling cap that the lenders under all 3 programs must abide by throughout the term of the loan. So regardless if the lender offers a fixed rate loan, or if the lender offers a variable rate loan for however many years the term of the loan is, the lender is required to abide by this loan provision that the U.S. Treasury Office set forth for all SSBCI loan programs. The lenders must abide and adhere to the interest rate ceiling caps established by the National Credit Union Association. Currently, that's 18%. So the lenders cannot offer an interest rate greater than 18%. And it's particularly important for the lenders when they offer a variable rate loan. And we communicate this to the lenders when we talk to them. But if the lender is offering a variable rate loan, it is important that they account for whatever that spread is they're adding to their basis or Fed funds rate, it cannot exceed that interest rate ceiling throughout the term of the loan. So being in a rising interest rate environment, if a lender were to say offer prime +2, let's say prime, I think prime is currently 7.25 now. It might have gone up 7.5. It's gone up quite a bit over the past couple of years, but 7.5 +2, that's 9.5%. So just an example, if it's a 5-year loan, at no point during that 5 years can that variable interest rate breach that 18%. So the lender has to structure the loan to be mindful of that. And most often what will happen is on the variable rate loans, the lender will put in the loan note an interest rate ceiling, which will prevent the loan from exceeding a certain interest rate level to ensure they don't breach the interest rate cap.
Great question. So that concludes the questions that we received in the chat. Does anyone else on the call want to come off mute with a question? Or if you have another question, I know we presented a wealth of information and the LED folks have been amazing in sharing all that's available to you all. But are there any other questions still lingering?
I'll tell you that while we are waiting to see if there are other questions, I'll share some final remarks with you, some examples that may be beneficial. I know oftentimes it's hard for a business owner to, number one, identify what programs and resources are out there across the state and available for them. That's why I'm partly excited about the Louisiana Business Hub centralized database I showed you, is because it captures all of that right there. But also, you know, a business owner can often feel overwhelmed with the number of programs that are available and trying to decide which one is better suited for them. And I'm talking about whether it's one of these LED programs we've mentioned, an SBA program, or even the USDA offers a guarantee program as well. And banks work with these other organizations also. So when we talk with banks, I want to share that comment, that feedback with you on the audience today, is that there is a way that a business owner can benefit from working with multiple organizations. There's a way a business owner can benefit from working with more than one of our LED programs at the same time. And I'm just going to share a couple of examples with you. So let's say your business needs to buy a building to turn into a new child care facility. Typically, those real estate transactions that are larger and may need a longer term for the loan typically fall best suited under the loan guarantee program. So the loan guarantee program may be a source of financing for that particular business need. But once the business owner is there, they might need some working capital to buy some supplies, get the place fully stocked up with everything they need to open the doors on day one. So the collateral support program may be of benefit, or the micro lending program may be of benefit for a working capital loan or working capital line of credit. I've just shared with you a way a business owner can use two LED programs at the same time, but have two very distinct, different business purposes. There's no duplication of benefits. Another example I'll share with you is if, say, Marissa mentioned that the maximum guarantee on our loan program is 80%. And the reason for that is because Treasury does require each lender to have at least 20% of their own private capital at risk. So the maximum we could offer is 80%, so we took it there. However, we're very aware that SBA and the USDA also have guarantee programs, and we know that they have guarantee programs that can actually offer a little bit higher guarantee percentage. We know that. So if that is the case where the business owner's needs are truly best suited for a higher guarantee percentage, then maybe SBA or USDA may be the solution for a guarantee request to buy the building, but yet you can still work with us for the working capital needs for your business, or a term loan to buy the inventory and supplies that you might need. Another example would be owner to owner buyouts. That is something that is ineligible under all three of our loan programs. So if you are buying another childcare facility, then maybe working with SBA for that particular transaction might be best suited. But then again, I encourage you to consider the LED programs for your working capital needs, your inventory, your equipment that you might need once you purchase that new childcare facility, especially if it's a second location or third location. There might need to be some extra marketing efforts, rebranding of some sort, new employees to be hired, payroll to be paid, a number of items that cost money, quite frankly. And so I hope that by providing just a couple of examples like I just did, might illustrate how a business applicant can benefit from working from more than one LED program or working with LED and another organization. There is a way to do that without having a duplication of benefits. So I'll yield and see if there are any questions that have come in.
Yeah, that's great. That's great. Last call for questions.
Kelly, I just want to say thank you, thank you, thank you. This has been great information. You just didn't know that all of these resources were out at your disposal. And so as a small business owner, it is phenomenal to know that Louisiana is doing these things right. I do have a question as we're asking for last call of questions. Are any of these funds subject to like ARPA dollars where they're going to be going away at a certain time? Or are any of these funds subject to, like some type of term limits that we need to be worried about? So I just wanted to ask that.
Great question. And I will be happy to share full disclosure and maybe more than you're wanting to know. But so the terms that you would need to be concerned with would be the term of the loan, for example, with the lender that you've engaged a transaction with. However, from the U.S. Treasury's perspective, for every single state in our country participating in SSBCI, which every single state is, every single state submitted application to the U.S. Treasury, every single state is participating. Not every state has the same programs though. So for Treasury, they have communicated to every state that for the dollars that you are potentially able to receive, so they said, Louisiana, you are able to potentially receive $113.2 million over 7 years to fund these 5 new programs for your small business community in Louisiana. Treasury has told us that they are going to dish out that money in 3 different tranches. Essentially, we've received the first tranche already. There's a second tranche we're able to claim in 3 years, and then the third tranche 3 years after we've claimed the second tranche. We have reporting requirements that we must abide by with Treasury. So as long as all of the reporting requirements are met, there aren't any compliance issues, which we have been working very diligently to make sure there aren't, smoothing out those rough edges and wrinkles. There should not be any issues in worrying about potential funding. And the reason I'm saying that is we don't know what we don't know, right? And I hate that saying, but I want to be very transparent in the fact that if something happens in Washington, D.C. that is completely out of our state control and on a federal legislative level, that is something that we cannot potentially foresee. And we would have to, in fact, every state would have to adjust accordingly. So while I feel the answer to your question in short is no, I want to be very transparent that, we didn't make the rules for this federal program. We're a beneficiary of it, and we want to take advantage of it as long as we can and do exactly what Treasury says we need to in order to receive every bit of the $113.2 million. But with, quite frankly, our economic landscape, rising interest rate environment, and everything else going on across our country, if there is something that develops that is not known today, that is something obviously that is outside of our control and we had no knowledge about. So I would answer that question with those remarks.
No, I appreciate that, and that's very fair. So we understand. We are in a very fluid industry, so we know there can be funding today, and not so much funding tomorrow. So we appreciate that transparency. And then we absolutely appreciate you and all the information that you've given. I would ask if you would maybe put your contact information in the chat. So if anyone has any additional questions, if you're okay with that, because
Absolutely, just dropped it in there right now.
people may want to ask additional questions that they might not have felt comfortable, or just things pop up in your head later in the days, like, oh, I need to ask that question. But I'm also going to release it to Candace. I do want to thank all of the participants for giving us your time and asking great questions. And I hope that we can use all of that $113 million for the great state of Louisiana and these small businesses that open doors for children and families and staff that really, really make our economies go.
Yes, yes, I echo Rochelle's sentiments. So Kelly, Marissa, Susan, thank you so much for your time this afternoon. Thank you to our participants, all your great questions. This call has been recorded, so we will be sharing this recording with all of you after the call. And we now have contact information if, should you have additional questions that come up later on. So thanks, everyone, and we will talk to you all soon. Take care.